Greetings traders, Jason here with SwingHigh.com. It is Monday, November 9th, 2009, and this is your halftime report. It's about 12:30. I waited a little bit longer than normal to record this video, mainly because I wanted to see if there was going to be any action here. So far, there isn't much. Let's take a look at things though. G20 met over the weekend, and I guess that improved market sentiment because we gapped up pretty big today, up 1.6% on SPY. Take a look at the other indexes real quick and come back to SPY. That's the NASDAQ, up 1.5%. The diamonds, up 1.5%. The Russells, about 1.5% as well, 1.6%. And the financials, up 2.5%, showing some relative strength in the financials today. So if you're going to trade from here on out, picking some financial stocks to trade might not be a bad idea if you're planning to trade them long. Let's take a look back at SPY. On the 5-minute chart, we have this big gap up. No attempt at a gap fill. Barely pulled back at all this morning. Basically just rode up very, very gradually towards the 109 area where we're finding some resistance. As you can see, the high today was 108.95. So that 109 area should act as some resistance. I expect some major resistance, big time resistance at 110. I don't expect us to get higher than that. Let me show you this 109 area. It comes from the high base formation that we saw break down at the beginning or the middle of October. It's not the strongest resistance line, but 110 is definitely going to be really, really strong. So what can happen now? Well, I was looking for that head and shoulders formation here, right? And right now it does not look like a head and shoulders formation. It looks like a continuation of the uptrend. However, keep in mind we have not finished the day yet. If by some stretch of the if for some reason we came back down and closed negative today, that would be so bearish, it wouldn't even be funny. We would be back below the 108 mark if we close negative. It would be a shooting star reversal pattern or some other sort of strong reversal pattern, and it would in fact be a head and shoulders with a little higher tail here, just a higher wick on that candle, which isn't that big of a deal. I doubt we're going to see a head and shoulders now. In fact, I wouldn't be surprised if we rode up to the 110 mark from here. I would like to see a double top on SPY now, but either way, we need to start losing momentum if we're gonna keep supporting the bear case here. Basically, fundamentals have been screaming for a very long time that we are way overbought. Since the middle and beginning of summer, we've been saying that. So the fundamentals are saying that we're overbought. But the market can do whatever it wants. It can go higher from here. Keep that in mind. So you got to trade smart. If you're trying to catch the down move, definitely today, as of now, is not the best time to jump in short. But always make sure you trade with your stop loss. Excuse me, that's Interactive Brokers, and that's my phone vibrating. I'm sorry about all those distractions. So yes, we could see a double top on SPY. That would be bearish. I want to look at IWM only because we talked about that double top before. And right now, it still looks like it could be a double top if we make a lower swing high here. Let's take a really quick look at the market internals because I think I forgot. The VIX down 2.5%, which is not really a big enough move in the VIX. I'd like to see that down more to corroborate this upside move. The tick is crap. The tick is bullish, and the TRIN is incredibly bullish down here at 0.4. That's overly bullish, in fact. Check back this evening for your post-market analysis where I'll talk to you more about stocks. Thanks for being a part of SwingHigh.com.